Well, isn't that funny? Okay, there we go, guys. That should be a lot better. My apologies. I'm still getting used to this. I got this new little voice meter thing here that I have to open in order to have audio. But there should be audio now. Is that better? Just give me a heads up there if we're better. I had such an exciting intro I was going into there. I'm so disappointed about it. Oh, that hurt. Better now, guys? Okay, perfect. Okay, so we are going to be talking about two major things today. We're going to be talking about GameStop, and we're going to be talking about some big earning events that are coming up today. We have CRM earnings, we have Airbnb, we have Doordash, a couple others. So these are all companies releasing either after market today or before market tomorrow. So it's definitely a trade, some trades there we're going to take a look at. It is a little too early for me, Cedric. I still haven't even had a coffee. You know, cut me a little slack here, guys? But we're going to have a good show today. I think first thing we should do is we should talk briefly about GameStop. If you're unfamiliar with what's going on, let's just pull up, stock. Let's pull up quick, right? You can see that actually GameStop had a huge rally again, right? Someone hit the bid. This thing went to the moon again. Looks like it's calmed down a little bit today, but obviously as we know how this thing goes, we are now entering another period of extremely high volatility for the stock. A lot of you might be sitting there saying, hey, let's take a look and see if we can maybe sell some vol here, right? IV rank is back up high. We have to remember the characteristics of volatility before we do that, right? Volatility clusters, meaning seeing this 40% day here, it's more likely tomorrow's going to be a huge mover again rather than a smaller mover. And when we see these periods of high volatility, the market actually understates it a lot of the time. There's a really interesting video that Jordan, my business partner, put together about does selling high IV rank work, right? If you look at Tasty Trade, for example, they say, sell high IV rank. If a company has the higher the IV rank, sell it. And if you end up losing, just roll the position. Well, the problem with that is that when we have that really high implied vol, it's usually because there's high realized vol. And if that's the case, well, you don't want to just sell it because it's high. You want to sell it when it's expensive, right? And high and expensive are not the same thing. And that might be what we're seeing here with GameStop, which is why I'm not selling vol here, right? I'm not looking to sell the at the money straddle or anything. No iron condor. It's moving too much. And there's better opportunities out there for something like that. I think everyone has a little PTSD. Even if you didn't trade it, I think this gives you it definitely stirs something up because it's a little wild. But it's kind of fun. I enjoy watching it. A couple thoughts that I've had about this. I can't remember exactly where I was reading it, but they were interviewing some of the big brokerage owners, right? Like the Interactive Brokers owner or TD Ameritrade, whoever's in charge of it. And basically these people were saying that it actually came very close to being catastrophic, right? Like if GameStop were to have rallied much higher, it could have been an extremely bad situation for the overall market. So there is this sort of sentiment for people, I guess, in a spot where they are holding the system up, that this is a bad situation and it could create a lot of turbulence in the market. So you might see a situation again where if this thing continues to pump up, like if we see another 100% day, you might actually see a similar thing to last time where trading on it gets halted, right? Whether you agree with that or not, it's something that you should be aware of, is that could happen. And so if you're buying in now or you're buying in after another rally or something like that, you might get stuck holding the bag because you can't get out, just like last time. The other thing to keep in mind is, a lot of people are saying, GameStop can go to $1,000. right? But we have to remember something super important, which is GameStop at $126 is very different than GameStop at $1,000. Think about this. We see it like, people pumping penny stocks. Why is that a thing? Why are they not pumping Apple? Right? Why is it you get 3,000 or 4,000 people tuning into a stream, pumping a penny stock, you jump in a little before and you're going to make money? Why is it? It's because of the market cap. This thing can actually be pushed pretty easily. Right? You have enough buying power. You could actually have enough buying power coming in to do it. And this is just an extreme case of that. Think about it. GameStop is only a $9 billion company at $130. Right? Pushing a $9 billion company is very different than pushing a $100 billion company. So in order for it to get to that point, it's like, where is this new momentum buying going to come from? And how much more can it ramp up? Can it ramp up enough to push a company to $1,000? It's such a different show at that point. So that's also worth considering. And then also, I guess at a more fundamental level, while GameStop is going on, there's a million other opportunities in the market. All right, there's a lot of other stuff going on too. You don't need to. It's very hard to peel your eyes away from this train wreck because it's so fun. And honestly, there's a part of me that loves it. I love seeing, the small guy get a little bit of get a little dig in at the big guys. But I'm also fearful that it's those same people holding on the way up that are also going to be holding on the way down, and the big guy still wins. So Curtis, any reason to buy a straddle? So I'm not, personally. And the reason I'm not is I don't think they're cheap per se. And there's just better ways to make money out there. Right? The only reason I can see someone getting into this right now is to have a gamble. And that's okay. There's actually no issue with placing a bet for a gamble, as long as you understand that that's what's happening. I don't think anyone can price this thing properly given what's happening. Right? Obviously, this thing is relative to book expensive right now. It's overvalued. But with all of the sentiment right now, the increased buying pressure, the shorts, all this stuff, who the hell knows, right? So I would say maybe the super pricey straddle is fair price. But, if I were to do anything at this point, I'd be going like 1 month out and trying to get filled on like an out of the money put spread where I just get like a ton of leverage if it goes back down to like $60. But I would be wanting like 100-to-1 leverage on that. Otherwise, like, because I'm not trying to put a lot of money into this. I have no conviction on this thing. If you, something else you could maybe do, like a interesting little idea is, let's say you think that GameStop could go up to, $500, $600. And if that does happen, it's going to cause some catalysts for macro vol, right? Maybe some more of these big funds fail, causes the market to crash. Well, you could kind of try and double dip where you short the market and go long GME. Huh? What do you think about that? Buy like the furthest out of the money call and put on both sides. That'd be some like level 10 thinking if it paid off. But yeah, that's really all it is for GME. Like, if you want to have some fun with it, throw a few bucks in the mix. Make it enough that it matters to you, but like really, really try to understand what your motives are behind it. Right? Remember as well that we as humans have this confirmation bias. So you'll be like, this thing can go up, and you'll go online and you'll see everybody in the retail space saying, hold the line. That's the new one. Hold the line. And you'll be like, yeah, Tim's asking, are there any ETF plays? The ARK funds are looking pretty pricey again. ARK K starting to get up there. I think Lit was starting to look really pricey again. I'd structured out a bearish trade on the Qs earlier this week, which looks like it could be getting there. Jordan, Qs are down another 1.5. Huh? Is my 100 to 1 leveraged put spread gonna print by Friday? Yep. By tomorrow? I think it's up $10 right now, but not really. Like Tim, have you seen the video on gamma scalping that we did? If you're looking for maybe something long vol, with all this turbulence sort of coming into the market, that video is one to check out, in my opinion. VIX is up 8% today. It's been super choppy over the last week. If you think that vols are going to be picking up here, you want to go some long vol, check out that video. It's and if you haven't seen it, I can send you it in a DM after. But enough talk about GME. If you guys have more questions about that, you can drop them in the chat, and I will. I'll be happy to talk about it more. But I'm gonna move on in terms of what I ramble about to you guys at my computer screen. So let's hop on over to the terminal and take a look at some of these juicy earning plays. Let's see. I was a little slow. Okay. Let's see here. Come over to the earnings analyzer. Which ones are we looking at? We're going to start off with Airbnb. I believe the ticker is A, B, and B. So the thing about Airbnb, right, you're probably like, whoa, what's with all this red? It's their first earnings. We have no data here, right? But what I am seeing is an implied move of 8.45%, right? So the thing we're still able to do, even with no historical data, is we're able to come down here. We're able to see the implied vol and strip it out, the non-event vol, and see, well, what's the market saying is going to happen on this event. And what we're seeing here is an implied move of 8.45%. So market's basically saying stock's going to open up tomorrow, up or down about 8.45%. Do we agree with this or disagree with this? It's a little arbitrary at this point because we don't really have any data to go off of here. Right? We can't really put much evidence to this idea. Maybe you could look at what's happened with tech companies, similar companies on their first earnings recently. I think usually they're actually implying a lot higher of a move. Right? If we look at like what's one recently, like Snow, was that one recently? Okay, it had an implied move of 11%, moved a lot more than it. Didn't jump much, but had a big move. Well, what's another one? Like PLTR came out in the last year, I think. It had an implied move of 15, moved 8. What's another one, guys? What's another earnings or company that came out this year? Did Doordash release earnings before, or is this their first one too? It's Doordash's first earnings as well. So when I look at Airbnb here, I try to think, well, why is it not implying as big a move as these other sort of fresh tech companies, right? And maybe there's a trade to be made here because of that. Maybe it's not pricing in enough vol for a company with no information to go off of. What might be worth looking at for this is going to the news, looking at what analysts are saying about it, going out Seeking Alpha, reading some articles, and just trying to figure out how certain are we about what's going to come out. At the end of the day, what causes a big earnings move is a change in guidance or a surprise on the numbers, right? If everyone is thinking that this stock is not making money and they come out and say they are making money, well, the market is going to price that new information in, and it's going to change the current price drastically. Likewise, if the company comes out and says, we don't expect, everyone thinks they're going to have a rough time for this year, and then it'll get better, because Airbnb, less people traveling, and they come out and say, we see this hurting us for the next 5 years, well, that's going to change the outlook on the company as well. These are the types of things that drive the big moves around earnings. So you want to look and see how much certainty is there around Airbnb. This is an area where, doing some fundamental research, looking at similar companies, spending that extra time can lead to a really good trade if you spend the time and try to build out that vision, that picture of what's going on. If we come over to the vol insights for it, we can see there's not much of a skew in either way. And I kind of like this because it kind of tells me the market doesn't know where the risk is. Market's kind of saying maybe like way out of the money here on the call side, a little bit of more risk being priced in. But if you look across like the delta 25, 75, the main chunk of it, it's pretty flat. Right? So maybe buying some vol here isn't the worst idea in the world. What we can do is quickly take a look at how this position is going to change in the morning so you can get an idea of what your max risks are if you do take a long vol trade here. So let's go to A, B, and B. We're going to trade the near dated options. So we got this 1 day, or you can do the 8 day, whichever one you prefer. I'm going to come here for the example and use the 1 day to expiration. We're trading at about $190. So let's come here and let's buy a straddle. So you can see here, straddle's going for about $17.50. And, the thing about this is with this 1 day to expiration, we have a lot of theta on this position, good amount of gamma, and a lot of delta. Right? So let's check this out. If we change up the numbers here, we came here, we look at it, we go, okay, how much is vols going to drop? Vols are going to drop by about 33 points. So let's come here, let's stress this position, see what it's going to look like in the morning. We're going to drop vols on this by 33%. And then we're going to move it forward 1 day to the 26th. And let's do one lot just so that everyone can look at this the same. So what we are seeing on this is if the stock moves 0% tomorrow, you are risking about $780. Okay? Max risk per lot, $780. Our break-evens on this are at about 173 and 206. Stock's currently trading at 190. So, how far would this thing need to move on either side in order for us to have maybe a 1-to-1 risk reward? We're looking at needing this to move to about $164. Right, so $8 past your break even on either side. That would be where you would at least break even on this trade. And that's a pretty big move. That's like a 15% move, right? So it's a tough trade for sure. It's definitely maybe fairly priced, and that's why I'm saying you need to do your research. But I'm just showing you this is what your position will look like if you just buy vol on this going into the event. Now, maybe you could do something a little different if you wanted to buy like a strangle. If you wanted to bet on like a huge blowout, you could buy a strangle. If you have a directional opinion, you could try and finesse something that maybe looks good to you. But the cleanest way to do it is if you think vol's cheap, buy the straddle. If you think it's overpriced, sell it. Right? Maybe pick up some wings. Term structure skew looked pretty flat, so you shouldn't be getting dinged too hard for picking up that reinsurance. But let's quickly go through some of the other ones for today. Right, obviously, Doordash is a similar situation where we don't have any of that historical data. Creates some room for guys who like to do the in-depth research. If you can build a better picture of the future than the analysts that are covering it, there's definitely some money to be made there. Doordash has a bit higher of an implied move at about 10%, so keep that in mind too. And it really comes down to if you think these new tech companies, they sort of fall into, Doordash and Airbnb sort of fall into a similar category where they're really a network, right? They connect providers and buyers, right? I forget the way they describe these types of companies, but like Uber falls into that as well. Airbnb is like the Uber of rentals. So all these companies have a similar sort of business model and value to their investors. So just some stuff to think about there. Now let's take a look at one that haunts most PA members' dreams. Anybody who was here about 2 quarters ago, you guys remember this one? We're taking a look at Salesforce. You guys remember this event right here where the move was 26%? Yeah, exactly, Tim. Gig economy. You guys remember this one here? So we were in here on this earnings event right now. Let's minimize this. It's lagging a little bit. Why am I having some lag on this? It's so weird. Yeah, we can see here 4.78% implied move back in August of last year. And then it moved 26%. And we were definitely short vol on this. And that was probably the biggest hit we took of the year. But that's why we get paid, right? In the end of the day, if you're providing insurance, you never get a crash. Well, there's no insurance business anymore. So, yeah, this is why it's haunting our dreams. Last earnings event as well was a bit of a loser, but is there something for us to do this time? Well, what I'm actually seeing off the bat here is, so Q1, we usually don't get a big move, right? I haven't seen that before, but it's actually looking pretty fairly priced. Right? It's implying 5.45%, average move of 5.62, average implied move of 5.06. Looks pretty fair. If you wanted to take a look at the straddle price here, you can see on the ones where you're wrong, you're not losing a ton of money, right? It looks like you're losing about a little over 10% of your risk, right? So if we come here, let's structure it out, see what it looks like. It might be worth taking on a long vol trade just to get some exposure, and it might not cost you as much as you think. Let's take a look. So we'll come over here, go to CRM, Salesforce.com. I actually like Salesforce a lot as a company. Let's see. It's trading at 237. Let's come here and buy a straddle. Straddle's going to cost us $13. Stock's trading at 237. And this is what the trade is going to... So this is the trade today. Right? We can see break even right off the bat. So we're going to do 2 things. Right? We want to simulate what it's going to look like tomorrow morning. So we're going to move it forward 1 day right here. Click. There we go. We're on the 26th now. Then we're going to come to the terminal. Right? This is one of the huge value adds. Right? A lot of people will sit there and say, how much will vol drop after the earnings event? And what they'll do is they'll try and estimate it, looking at further dated options maybe. But here you can get a pretty well accurate number. So we expect vols to drop from about 57 to 34. Okay? And if my brain serves me correctly, that's about a third, I don't know, 23 point difference. Yeah. So vols are going to come down about 23 points. So we're going to come over here to this little cog, and now we're going to make that adjustment, and then we should see what this trade will actually look like in the morning. Minus 23. Here's what the position is likely to look like. Right? Think about what we did here. We moved it forward today. We lowered the vols by what we think it'll happen after the event. So our trade will look something like this. Our max risk per lot is about $600. If we're wrong, we're gonna lose a little bit here, right? $600. So it's actually about 50% of the risk that we're putting up. And this is assuming we don't get greedy. We close out in the morning around when we're supposed to. But I'm going to check one more thing because when we're long vol, I got one more thing to check out actually. So as it looks, our break evens are at about 224 and 249. So stock needs to move about $15, right? Which is actually, it's happened, right? It could happen. It's in fact what happens on average. Now, so remember this, our maximum risk here is that $600. but that's if it moves 0, which is pretty unlikely, right? We're more likely to see something close to the average, maybe a 3% move, right? So let's say, if it moves 2 or 3%, we're losing, so if it goes from, so 2% would be a $4.50 move, let's say. So it would move down to $2.33. Right, so $2.33, you're risking about $500 per lot. So you're risking about 33% of the premium that you're paying, and you get the exposure that you want. Right, this is assuming you have no directional bias. Now, as for when you should close this thing out, well, there's a couple things that we can actually consider here. You see if there's any chat in the group, anything I should look at. Guys are talking about ARK. Nice. We'll have to take a look at ARK next week, maybe. Well, how many of you are familiar with a concept called post-earnings announcement drift? So it's the concept that basically when a stock jumps on earnings, we can sometimes see stocks have this pattern where it'll trend in the direction of the jump. So for example, we see here, it jumped 16% and the move was 26, meaning it jumped up and then it continued to trend up. Right? We can see here it jumped down and continued to trend down. Here is about even. Here it didn't. Here it didn't. Or here it did. Right? So let's count quick. 1, 2, 3, 4, 5. 5 of the last 12 events, it's followed that drift. So what I was going to say was if we see a strong correlation here between the jump and the move, we could maybe make it, we could decide to hold it longer. But I'm actually not seeing that here. All right, I'm not seeing that correlation that would make me say, hey, let's maybe hold this beyond the earnings a bit. It'll likely continue in whatever direction it jumps. So what I would be doing if I were to take a long vol trade here, I would be closing it out in the morning, right? And you might get even lucky a little bit if maybe you'll get the jump, you'll want to get out after the jump, and the implied move will still be baked in a little bit. So maybe this number here is maybe it's only gone down 10% or something. In which case, not bad. See, you make a little bit more money, or if it didn't move, you save a little bit of money. So we have, I think, 1 or 2 more that I want to quickly take a look at here. We're just going to scan over them quickly, just so you guys have an idea. VMW looks about in line. Negative P&L here. Maybe no trade. Thinking no trade on this, just off a quick glance. WDay looks a little bit pricey, just a touch. First quarter, we don't see moves this big usually, or historically, I should say. Implied move of 6, average move of 5.8. First quarter looks like a pretty slow one for this company. You know what it is, short vol gang. We're going to sell some options here, guys. And then we got one more. ADSK. Let's take a quick look. And once again, not a ton. Not a ton of juice today, guys. It looks like everything's being priced fairly because everybody's busy looking at Gamestop. So yeah, guys, those are really the stocks that I personally wanted to take a look at today. You guys have anything on your radar? We can keep chatting about GameStop a bit. I can do a little scan, show you how I scan for stocks. I'm hanging out for a little bit here. Be happy to chat with you guys about it. And for those of you that might be new to this stream, I see we have 21 people in here right now. I want to welcome you all. My name is Sean Ryan. I'm the co-founder of Predicting Alpha. I basically run this morning stream to do a 30-minute quick fix of quantitative information on the market, put a few trade ideas out there, but not trade ideas based on the lines I drew on a chart, but based on trying to price what the market is showing me and find real areas of disagreement with the market, right? The type of trades that we can have a little, that extra bit of confidence in because there's a little more evidence behind these ideas, right? That's really what we're trying to do here at Predicting Alpha, is just help you make better decisions on the trades you're taking. Because at the end of the day, trading is a competition where you make a decision and somebody is literally making the opposite decision of you. When you buy something, someone's selling it. You're saying it's cheap, they're saying it's expensive, right? So whoever makes better decisions over time wins. Hey, what's that ETF that has GME as like 10%?
XRT.
So Curtis, something you could look at is XRT. XRT is an ETF that GME is like a 10% stake in it, or I guess a 20% stake now. So you might want to look at their vols. Might be interesting. As for BlackBerry and AMC, we haven't seen them hit the rally. Right? I like, if we go over here right now, we take a look at BlackBerry. Where's the rally? Right, we look at AMC. 9%? Are you kidding me? There ain't no juice. Where's the 10 bagger? There's no 10 bagger on this. What else? What was SLV? Come on, they're not going to push SLV. This thing's an ETF. I don't know. It's crazy. But yeah, I don't know of any in particular. XRT would be the only one that might have some correlation with it properly, and that's just because it actually holds it. But I would be very surprised if the vols for XRT were not pricing in some sort of a big move. Now, one thing for the guys that have recently tuned in, this is something that I offer only on this stream right now, which is I'm going to be doing a free trial for the Predicting Alpha terminal towards within the next couple weeks. I know I've been saying that for a while, but we are just we have some cool stuff we're developing that we want to get done before our free trial. And but what we're going to be doing is basically 1 week for free. You can come in. It's more than enough time to go through almost all of our education, to place dozens of trades that are backed by data, get to know other traders who are really passionate, really serious about this game, and even have a couple one-on-one sessions. So if you want access to that free trial, all you have to do right now, I'm doing 50 of them, and we still have some spots, is send me an email to sean@predictingalpha.com, and I'm just going to add you to a list for it. And I'll be sending out the invites once they're ready. Obviously, if you want to get started before then, you can just go to predictingalpha.com. It's affordable. So, DKNG is tomorrow. That's what Rob's saying. Let's take a look. DKNG. Ooh, DKNG. So, hasn't had any big blowouts here. Control, I'll answer your question in 1 second. So DKNG, implied move of 8.2%, average move of 5%. Looks a little pricey, but once again, man, not a lot of data points here. That always makes me a little shaky. I don't know about it, but looks a little bid. I would say you could pick it up. Let's maybe come over here to the vol insights. Take a look at the skew. So I'm not seeing anything with the skew that's super juicy. So I would probably, if I were to take this trade, I'd be short vol. I'd probably put on an iron condor. Let's come over here, take a quick look. DKNG. All right. Let's price out the $60 iron condor. So we're going to come here. Look at the straddle. Straddle's going for $5, $60. We're going to sell iron condor. Put our at the money strikes at 60 and our out of the money strikes $10 away, or 2 straddle prices away. So that would be 60 and 50. We're giving up about 40 cents to pick up those wings. That's nothing. We can totally afford that, right, boys? So let's pick up this trade if we want to be short vol on DKNG going into the earnings event. I don't know if I'd be taking a long vol trade here. It's looking a little pricey. Always remember, though, putting on a trade like this, you could be wrong. You could be wrong. And you have to be willing to embrace the risk, right? One of the reasons that we get paid for taking these earnings trades, we only have a small edge on each of them, 4% edge, something like that, is most people can't stomach the volatility. So ask yourself if you've got an iron stomach, diamond stomach, or paper stomach. Control. Let me answer your question here. So in terms of development, the terminal is fully functioning, right? It updates. It's good data. We have a couple of different tabs here. So we have all of our volatility insights, right? Basically analyze the entire vol surface, historically and current, as well as we provide you with forecasts of future volatility up here for every stock, and a scanner that you can look at a number of different factors in the vol space, trying to find cheaper, expensive plays for a number of different strategies. We have all of our earnings information. We have a portfolio manager tool that allows you to analyze the numbers on your own portfolio. You fill out a trade journal, you plug it in. It's pretty good. We have tools like this that allow you to compare, let's see, let's say I wanted to look at the term structure today for DKNG versus the term structure last week, right? I'd be able to plot both of them, see the term structure comparison for them. I can do relative value stuff, correlations. There's a lot of, there's a ton of stuff in here, right? The problem that we face is if you're new to the world of quantitative trading, it can be pretty intimidating and it can be tricky to understand where to start with this stuff. So our new round of development is to make it more user-friendly, right? To put it at a spot where you can come in and it makes sense, right? Maybe you don't need to see all the numbers on the back end. You just need you need to understand the why, like what is going on here. So we're trying to change it up. Maybe we're going to add things maybe such as, a strategy scanner. So it's like, you like to do this. You like to trade bull put spreads. You like to trade, well, what stocks have the best environment for bull put spreads given a number of different quantitative factors? But all you have to do is click and it'll pull up a list for you, right? Or maybe you want to trade covered calls. It's like, okay, well, what stock is trending and has expensive calls, right? Most people are trading covered calls on stocks they like, but they're not necessarily trading them on stocks that they like that also have expensive calls. And that's why you see, I know people who they think they're geniuses because they traded covered calls on, let's say, Microsoft, and they're like, I made 60% this year. But then you look at it and it's like, well, they could have just bought Microsoft and made 60%. So they didn't generate any alpha. So this is just to add that, to make that transition to data-driven trading as easy and simplistic as possible. Right now, everyone looks at quantitative trading and thinks it's kind of scary. It's like, where do you even start in this world? And what we're trying to do is just make it easy, make it cool, make it easy, make it profitable, right? Doesn't need to be anything else besides that. You don't need to be a math wizard to look at the answers of a model, right? But those answers of the model can really help you define your view on something a lot better than if you didn't have them, right? At least gives you the full picture to look at. So I hope that long-winded rant about where we're at with our development answered your question. Basically, it's good to go. We're just trying to make it easier to use so that people can get real value out of it on a short period of time. Will you add open interest, gamma distribution across the strikes, expiry, time and sales, things like that? What do you think? Probably not. Probably not, because we need to the reason why it more or less comes down to this. Markets are pretty smart. Information of that nature, we have to ask ourselves, like, what is our advantage in knowing it? If everyone else knows it, or if most of the money in the market knows it, and most of the money in the market is actually quite smart, what's our advantage in knowing it, right? Remember, if there's like you know, a whole bunch of small guys who don't have that, and a few big guys. Or what's the best way to put this? I just don't know if there's any alpha there, right? But and you can get that in good quality in other places. So we want to focus on things that we can provide to people that they can't get anywhere else because it's hidden behind really high paywalls, right? When you get a Bloomberg terminal, you're not using it to look at open interest. You're using it to look at the vol surface. You're using it to price volatility. All of these things that sort of make sense to the average person, but it's also like, it's complicated stuff. And we're just trying to make that easy and smooth, right? Easy to use. Here's what you want to do for different strategies. Here's some ideas for strategies. Here's a scanner if you want to go find an idea. We're going to be adding so things that we are going to add, for example, are really high quality news sources, right? Because using Google News is garbage, right? Yahoo Finance News, garbage. We're going to add really high quality news sources. We're going to add really high quality sentiment information, things that you can't really get somewhere else unless you pay a lot of money for it. So we're going to try and, democratize the information that's behind the paywall. So I just see a couple of you emailing me right now, hopping on that list. I appreciate you guys hopping on that so quick. It makes me really excited to know that other people are excited about this project as well. It's time for us to modernize trading, guys. This is what trading is. Understanding that relationship between data and returns is actually what separates the big guys from the small guys. It's not who they know. It's not the degrees they have. It's not necessarily how much money what their assets under management is. It's actually just the information they have access to and the way they look at trading. There's not a hedge fund out there that makes money that's looked at a chart in 25 years. And it's not because the charts aren't fun. It's not because they can't see the patterns themselves. It's because it doesn't generate alpha. And this is the game, right? We're in a competition here. And I just want to even that playing field for everyone because I know what it's like to spend years learning something that you perceive as a skill only to be coming out the other side of that rabbit hole, down money and with no new skills, no employable skills, no skills that you can build off of in any other area, right? That was my big issue with technical analysis. And that's why I love this quantitative approach, right? If we can make quant easy, I think the future of finance will actually change forever. I think of predicting alpha as David's slingshot that he uses to take down Goliath. Right? It's just a tool that makes your life a little easier. So yeah, with that being said, guys, do we have any more questions? Anything I can help with? I'm all ears, and I guess mouth. I'm talking, but I'm around for a bit. I'd be happy to answer any questions you have about predicting alpha, about the markets. Yeah, you let me know. Interesting. Even the guys in the Predicting Alpha server are talking about GME. Everybody's talking about it. It's hard to take your eyes off of a train wreck, eh? 26 people on the stream. We're almost at all-time highs, guys. GME going to all-time highs. My stream's going to all-time highs. I just hope that I can maintain it when GME inevitably comes back down a bit. What's GME doing right now? Actually, are we still pumping? Oh, floating around here now, eh? I actually have a friend who picked up a bunch of GME calls yesterday. I looked at him like he was crazy, and then and now he's gonna be picking me up in his new Tesla later today. I'm gonna go for a ride. Are we back? How long was I down for there? Oh, man. 29 viewers. That gets me really pumped up, guys. This is the most I've seen on my stream in forever. Really happy to see you all here. If you guys have a trade you want me to break down, I'm more than happy to talk about it. If you want to hear about my thoughts on GME, I spent about the first 10, 15 minutes of the stream talking about it. And then we went into some earnings trades. We talked about Airbnb and Doordash earnings, what to do because it's their first earnings. What sort of research should we be doing? We talked about CRM earnings, looking like a pretty good opportunity to buy some volatility going into that, as well as I think it was with W Day as well. I can't remember which one. But yeah, CRM looking pretty good for long vol. You're going to be able to get a pretty cheap ride betting on a big move in this event. Airbnb looking maybe a little cheap going into the event. And Doordash, not a ton of info about. Hansel, I really appreciate that, man. I think we'll get there one day. You know, it's just got to keep slugging it out, keep slugging it out. I asked this on the last stream, by the way. Are any of you guys on Clubhouse? I've been having a lot of fun with that app recently. Been going into a lot of the chat rooms there, chatting with people about the market, sharing some ideas, talking a lot more about my actual philosophy on trading, right? A lot of the stuff that we talk about in PA, for example, like on our nightly lives. I try to share a little bit of that through Clubhouse. Some really fun conversations and honestly some really nice people there. If you are on Clubhouse, I would love for you to drop me a follow. I'll put my handle in the chat right now, and we can maybe tonight we'll set up a little room. I've been trying to get Jordan to hop into Clubhouse room with me for a while, but I think he's afraid. I think he has stage fright. I don't think he's gonna. He can't bring himself to have the chat in public. What do you think, man? Is that the truth?
No, we'll get there.
I'm just roasting him. Adam, what's going on, man? You said, I decided to try the Chegg long vol trade you mentioned the other day. Is there a downside to delta hedging more often than once a day other than the bid ask? So Adam, it depends. If you are in Canada, yes, because we pay it to get in and out of trades. If you're in the US, then I guess like you're not paying to get in and out, so you're not losing any money there. The bid ask gets pricey, but besides that, it's also, don't get to the point where you're hedging every one delta. You know what I mean? You don't want to be spending your entire life delta hedging. The real benefits are like, set a threshold of some sort. What maybe makes more sense for someone in your spot who can afford to do it more than once a day is set a threshold for hedging it, right? Look at your position and be like, how curvy is my payoff? How quickly do I pick up deltas? And maybe be like, every 50 deltas, I'm going to hedge it. Right? Every 100 deltas, I'm going to hedge it. Every 10 deltas, I'm going to hedge it. Whatever that number is for you, all you want to do is you want to have some sort of system behind why you're doing it. Wait, did I not drop my handle here yet? Oh yeah, add investing advice. Yeah, drop me a little follow there. I feel like not enough people are on this app. I think it's really fun. You get a lot of value out of it. Got you, Adam. Good luck with that trade. How's it going? Let's have a look here. CHGG. Oh, baby. This thing's moving. We're moving here. Let's see. What's going on with the implied vols? Implied vols are pretty flat. Let's see what this... I think we talked about that maybe on Monday. Adam, are you a millionaire yet, man? This trade is so good. If you put this on when we first talked about it, you should be printing right now. That's really cool, man. Congratulations. I hope that's what's happening for you. Yeah, so that I was actually that's why I was recommending these tech companies, because they look to be like in a picking up vols a lot quicker than the rest of the market. Right? So it looked like a pretty good opportunity to be doing this. What expiry are you trading there, Adam? Are you trading like a couple weeks out? What's the deal? Justin, just if you want, Justin, DM me your phone number and I'll send you over an invite. I'll add you as a contact in my phone and I'll send you an invite. March. Okay, perfect. Yeah, good stuff, Adam. That's you don't want to be like necessarily just trading like the weekly or something. So give yourself about a month there. It's pretty good. And what I'd honestly, Jordan was talking about this too. Experiment with trading different time frames, right? So like, different expiries. Try the monthly. Try like maybe 2 weeks out. Try 2 months out. And because what this also represents for you is a really good opportunity to learn about volatility, right? Biggest mistake people make in the options game on the retreat back up. Okay, there we go. You want to answer those questions. When am I making money? When am I losing money? Why am I making money or losing money? Right? What is my view? Does my position match it? And then watch how your trade evolves over time. And you'll really come to grasp this concept of volatility, which is the tool that we're actually trading first and foremost with options. And once you get that and you start to think about, well, how does volatility work? How can I forecast it? How can I predict it? The entire world of trading will change for you. And you'll start to see why the big boys have crushed the small guy for so long, right? You'll come to see it. You'll see it's not because they have better connections. It's not because they have an office on Wall Street. It's actually just because they play the same game as us, but they're better at it. And it's because of the data. It's because the way they think is a little differently, but it's not exclusive to them anymore, right? What we're trying to change here is we're trying to make it decentralized, not exclusive to somebody who can afford a $30,000 terminal, right? At the end of the day, when you don't have the terminal, like a Bloomberg, you kind of got to go do it on your own. And that's sort of our background, right? One cool thing I love about, I think really separates Predicting Alpha from everywhere else is we actually do this stuff, right? We're not, we're not academics, things like that. One other possibly esoteric question. I was reading something that recommended hedging with realized volatility than implied. Is this just a tiny difference most of the time? I'm going to need a little more clarity on that question here. So you would be hedging on the realized moves, right? Because the stock would be moving. Jordan, do you know what he's referring to?
Yeah. If he hedges using realized vol instead of implied vol, his P&L is going to be a lot choppier. But here.
Okay.
I'll come to
Yeah, because I'm like, wait.
Hey. So if you hedge using realized vol instead of implied vol, your mark-to-market P&L is going to be a lot choppier, right? Because the market might be saying, this is implying this, but you're hedging on a different level. But your end result is actually going to be a lot more stable. And so if you trade using the implied vol as your hedge levels, your P&L is going to be a lot smoother, but the end result is going to be a lot choppier. So a firm, for example, might use a firm will almost always use mark to market because
it looks better.
Yeah, they want to reduce their variance, right, and increase their Sharpe. So, long story short, if you as a retail trader, I usually like to hedge realized vol, or our future forecast of realized vol, but that sometimes takes a little bit of modeling.
Well, there you go. I hope that answers the question. Let me know if you have a follow-up to that, Adam. But if not, guys, that is going to be the conclusion of the stream for today. Remember, if you want that free trial of the Predicting Alpha terminal, it comes with all of our education, our community, a one-on-one call with myself and Jordan. All you have to do, send me an email to sean@predictingalpha.com, and I'll add you to the list for it. We're going to be releasing it after we make a few changes to the terminal. We have a few cool updates we would want someone to experience that can really, whether they stay with Predicting Alpha or not, can really make that paradigm shift in the way people view the markets, which I think is so necessary. So yeah, for running this stream every day, all I would love is a little like on the video. And if you know someone who's passionate about markets as well and is looking for a show that isn't like the others, that isn't just another guy talking about the breakout, I would love for you to share this stream with them. If you get value from it, it's almost certain that they will get value from it too. And I'm damn consistent with the show. I'm here every day. So I'd appreciate it. And we'll see you guys tomorrow. Have a good day.